Hello traders, you are welcome back to the Forex Geek channel. In today's video, we are going to be looking at the concept known as trend following. Okay, so specifically, we are going to be examining some of the best trend following indicators that we have. Okay, now these indicators are essential tools for anyone looking to stay on top of Forex market trends. Okay, if you are looking to make a smarter trend-based trading decisions, make sure to stick around and hit that like button if you find this video insightful. Okay, now let us start with the basics. What exactly are trend following indicators? Simply put, these indicators help traders detect the current market trend and guide us on whether to enter, hold, or exit a trade based on that ongoing momentum. Okay, now unlike oscillators or strategies that focus on mean reversion, trend following indicators focus on letting us ride the trend as it unfolds. Okay, now, this is especially helpful in Forex because trends can often be steady, giving us opportunities to follow them for significant market movements. Now, for those of you new to Forex, trend following might be one of the simplest yet powerful approaches to consider. Okay, it is a popular saying. It's a popular saying that the trend is your friend. Okay, it's a popular saying. It's something that traders often say, right? All right, now let's dive into some of the best trend following indicators for Forex traders. And the first we are going to be looking at is the moving averages. Okay, so we're just going to load the moving average to our chart. All right, now first up, the moving averages have a couple of classifications, right? We have the exponential moving average, we have the simple moving average, we have the smooth moving average, we have the linear weighted moving average. So the moving average itself are classified under categories. Okay. However, the moving averages generally they help to smooth out price data, and they make it easier to spot the direction of the trend. Okay, so traders often look at crossovers where a short-term moving average crosses a longer-term one to get signals. So we are just going to be briefly looking at the signals from each of the indicator that we are going to be considering in this video. So we already added the 50 EMA. I'm just going to add the 20 EMA because the popular signal that traders use with the moving averages is the crossover signal, right? The crossover strategy. So how it works is when the shorter term moving average, in this case, which is the 20 EMA, crosses above the longer term, in this case the 50 EMA, we have a buy signal. Okay, so when you get that buy signal, you can then enter a buy trade. On the other hand, when the shorter term moving average, in this case the 20 EMA, crosses below the longer term moving average, in this case the 50 EMA, we have a sell signal. After that, after the crossover, you can then enter a sell trade. Okay, when these averages align with a longer term trend, you get a clearer sense of direction. For example, now as we can see that we had a bullish crossover around here, and then since then we see that the price has been consistently bouncing off the moving average, showing that this is a bullish trend, right? This has been since the crossover happened. Around October. It's October, right? Around the 23rd or 20th October to there, about 23rd October 2023. I hope you're saying the dates right. You can see it occurred around 23rd October 2023. That was when this bullish crossover happened, right? And then you can see up till now, gold is still in a bullish trend, XAUUSD, and this is November 2024. So it has been over a year since this bullish trend started. Okay, now this moving averages has shown the clear direction of this trend, which is a bullish trend. And for trend following traders who have entered this who had joined this trend from the beginning, by now they will be swimming in a lot of profits. Okay, we're talking about thousands of pips in profits. We're talking about thousands of pips in profits. Okay, so that's a good catch. That's one of the reasons why following trend can be very, very profitable. It doesn't mean that there are no risk involved. Okay, there are risks involved irrespective of the strategy you are using. There are always risks involved, and profit is not guaranteed. It's just that if you are following trend, then it might be easier to make profit because you are just benefiting from the direction of the markets compared to when you are trying to use other strategies that are not following the trend. Okay, but it doesn't mean that profit is guaranteed, right? So the second indicator we are going to be considering is the MACD, the moving average convergence divergence indicator. That is the next indicator we are going to be looking at. All right, now this indicator calculates the difference between two moving averages, offering both trend direction and momentum. Now, a crossover of the MACD line, right, above the zero line, it shows a buy signal. Okay. On the other hand, when you have the MACD line cross below the zero line, it shows a sell signal. And then when you have the histogram bars getting longer, it shows an increase in momentum, right? So we can see that at this point, when we had a bullish crossover, we had the MACD line cross above the zero line. We can see that it was indication of a buy signal. And then we had the histogram bars getting longer. It showed that the bullish momentum was strong. And you can see all the way up to this place, it has been a bullish trend, okay? So, and you can even notice that the zero line was even pushed down. So there was not much chance for a sell signal to even be generated, showing that this is really a strong bullish trend. That is the reason why the zero line was even pushed down. So all this while, it was bullish. All this while, it was bullish. Now compare this with around this period. The zero line was around the middle. This is because we didn't really have a strong bullish trend yet. So we even had a sell signal here, after which price dropped for a while. And then you see during this period, we are having, a form of consolidation. Then eventually when the bullish trend picked steam, or when bullish momentum picked steam, we had MACD carry out its usual crossover, and then it even began to push the zero level down, okay, showing strong bullish momentum. Okay, now the third indicator we are going to be looking at is the average directional index. Okay, we're going to be looking at the ADX indicator. All right, now the ADX indicator is unique because it doesn't tell you the trend's direction, but measures its trend. So the ADX can tell you whether the trend is strong or not. Okay, so it's also a good trend following indicator because you can use this to know whether this trend is still strong, whether you should still remain in the trend or if you should exit. All right, so a high ADX value, for example, as we can see here, we can see how the ADX line rose up above the 30 level and went all the way up to this place. It showed that the bullish trend is strong. Okay, this can be super useful if you want to filter out trades during weaker trends or in choppy sideways markets. So when you have the ADX value rising up, it shows that we are in a strong trend. Okay, so the ADX is proper useful. Now the fourth indicator we are going to be looking at is the Bollinger Bands. All right, the Bollinger Bands are also very useful indicator when it comes to trend following. Okay, another favorite for many traders is Bollinger Bands, and this indicator shows volatility by setting upper and lower bands. As we can see, we have the upper bands and we have the lower bands around a moving average. The moving average is the one in the middle. Okay, let me just let me remove this, the EMAs. Let me remove the EMAs so we can see it clearly. All right, so we can see the Bollinger Bands has a moving average in the middle, and then we had upper band, we have lower band surrounding the moving average in the middle. Okay, now when the price is near the upper band, it's often considered overbought, while near the lower band, it's considered oversold. Okay, now this can help you identify potential entry or exit points during a trend and avoid trades when markets get too volatile. Now, in the aspect of a trend following strategy, the Bollinger Band itself will be tending upwards, as we can see how the Bollinger Band itself trending upwards. It's rising in a gentle slope. We can see how the Bollinger Bands are rising in a gentle slope, okay? And then you will notice that majority of the times, the price was moving within the upper channel of the Bollinger Bands. There are times, this brief period of consolidation, we had a brief period of consolidation around here, okay? We had a brief period of consolidation around here. During that period, the Bollinger Bands was mostly moving in a horizontal direction or moving sideways. But then after we had a breakout, you can see that price continued to move in the upper channel of the Bollinger Band. This shows that this is a bullish trend. And then you can enter buy trades according to the signal. All right. Now, the fifth indicator we are going to be looking at is none other than the Ichimoku Kinko Hayo. All right. Now I'm just going to remove the Bollinger Bands in order for us to see the Ichimoku properly. Okay. All right. Now we have the Ichimoku clouds. Specifically, we are going to be focusing on the Kumo cloud, specifically in this Ichimoku indicator. All right. Now the Kumo cloud helps us to identify the trend, because the Kumo cloud itself serves as a dynamic support and resistance. Okay, it serves as a dynamic support and resistance. Now, this indicator might look complex at first, but you know, the Ichimoku cloud gives us a really complete view of the market's current state. Okay, the Ichimoku indicator. Now we can see that when the Kumo cloud of the Ichimoku indicator, when it is down or when it is below the price, it serves as a support. And then we can see that the Kumo cloud was also somewhat rising gently. It was creating a gentle upward rising slope. And then we can see that price was bouncing off the Kumo cloud, which was serving as a dynamic support. So in that case, it helps us identify that this is a valid bullish trend. And then you can enter buy opportunities accordingly. You can enter buy trades rather accordingly. Okay. So how do you put all these indicators to work in your strategy? You can actually decide to combine all those indicators together in one strategy, or you can decide to select from them. Perhaps you can use just one, or you can use a few, or you can use all of them if you want multiple confirmations. All right, we have already talked about confluence in a previous video. You can check it out. You know, confluence is when you have multiple indicators giving you one signal. It aids, or it serves to validate that signal. Okay, it adds more validity to that signal, or more potency to that signal. All right. So you can decide to use multiple indicators to trade just to get extra confirmations, or you can just pick a few. All right. Remember that no indicator is foolproof. Each indicator has its strengths, but they work best as part of a broader strategy, especially when combined with sound risk management. Okay. Remember, it's good that you experiment with these indicators on a demo account before you go live. Okay. If you want to keep refining your strategy, make sure to subscribe to this channel so that you don't miss out on future videos on Forex trading indicators and techniques. If you found this video helpful and you're ready to take your trading to the next level, go ahead and hit that like button. Don't forget to subscribe and turn on notifications so you won't miss any of our upcoming videos. All right, let's keep learning and mastering the Forex market together. Thanks for watching, and I'll see you in the next video.